Once you have your sales budget, the next step is to prepare a production budget. Remember, a production budget would be only prepared by manufacturers. If you are a merchandiser, instead of a production budget, you will have a cost of goods sold budget. It will be called a cost of goods sold budget. The production budget is the only budget that is prepared in units. There's no dollars anywhere in the production budget. What you do for the production budget is you start off with the number of units you need to sell, and you add the amount of ending inventory that you need to have. Companies typically want to have a certain amount, a certain percentage of their following month's production so that they can carry it over to the next month so they don't run out of inventory by the time next month's production is complete. So, units needed for sale plus desired ending inventory will give you how many total units they need. But don't forget, you also have beginning inventory. So you subtract the units in beginning inventory, and that will give you how many units you need to produce during a given month. We'll take a look at an example next. Be sure to pause the video and read this example, and we will go through it in a minute. Whenever you're doing a production budget, you start with the number of sales units. So you're going to start with these numbers here. Next, you are going to find out what would be the desired ending inventory. And here they tell you that this company has a policy that the ending inventory of jars must be 30% of the following quarter's sales. Unless they tell you otherwise, you would use that same number to calculate the beginning inventory. The requirement says prepare a production budget for the year that show the number of jars produced each quarter and for the year in total. So whenever you set up your production budget, you're going to have your quarters or months across the top here, and they typically want you to calculate a total as well for the whole year. It will be for the year or a quarter depending on whether you're looking at months or quarters. Then on the left hand side down vertically you will have the description of what you're going to calculate. Here we're going to start with unit sales, add ending inventory, which gives us total needed, less beginning inventory, and that'll tell us how many units we need to produce. So step one would be to put down the unit sales that you want. So quarter one is 153,000, quarter two is 184,000, quarter three is 211,000, quarter four is 163,500, and a total would be you just add those 4 quarters totals across, and that will give you 711,500. The next step is to calculate the desired ending inventory. They told us that they want ending inventory to be 30% of the following quarter's sales. So you have to take a look at the following quarter. Right now you are calculating the ending inventory for quarter one, so you need to go look at quarter two, which is 184,000, and take 30% of that. You take 184,000 and take 30% of that, and that will give you your desired ending inventory, which is 55,200. Then you do the same for each quarter. So for quarter two, your desired ending inventory is going to be 211,000 times 30%. For quarter three, it's 163,500 times 40%. How do you calculate the fourth quarter's ending inventory? In the question, they told you that the quarter one of the following year, they told you how many units need to be sold. So what you do is you take that number, which is 226,000, and multiply that by 30% because that will be your fourth quarter's required ending inventory. Then you need to find out what your total ending inventory is. In this case, you do not add those numbers across because you just step back a minute and think, what are they trying to ask you? Unit sales for the year, it makes sense to add it all across, But what would be the ending inventory at the end of the year? Because the total is for the whole year. At the end of the year, your ending inventory is whatever you would have at the end of the fourth quarter. If you take a whole year and you're looking at a year's worth of data, the ending inventory is the inventory at the end of the fourth quarter, which would be 67,800. Then the total needed for the quarter is calculated by adding your unit sales to your desired ending inventory for each quarter. So for quarter one, you're going to end up with 208,200. For quarter two, it's 247,300. Quarter three, you're just going to add these two rows, 260,050, and quarter four is going to be 231,300. So for the total needed, you can just add it across all these columns and end up with 779,300. Now, next step is to calculate our beginning inventory. They have not told us any information on beginning inventory. If they did tell us, we would use that number here. But here they didn't tell us how much was beginning inventory. So we have to figure it out. You know that ending inventory for one period becomes the beginning inventory for the following period. So our beginning inventory for quarter one would have been the ending inventory for fourth quarter of the previous year. The fourth quarter of the previous year would have been calculated by multiplying our quarter one sales, which is right here, by 30%. And that is what we're going to use as our beginning inventory, which ends up being $45,900. Now for quarter two, you can use the same calculation, which would be multiply 184,000 by 30%, but you've already done that calculation. The ending inventory in quarter one is the beginning inventory of quarter two. So all you've already calculated that. You know that it's 55,200, and then you would use that number. So quarter two's inventory is the same as, or beginning quarter two inventory is the same as ending quarter one. Beginning quarter three is the same as ending quarter two. And beginning quarter four is the same as ending quarter three. Now, to calculate the beginning inventory for the whole year, again, you got to step back and think. It's a whole year. What was the beginning of the year? The beginning of the year was the beginning inventory in quarter one, and that is the number that you have to put here. So you're going to have beginning inventory of 45,900 as your total beginning inventory. Finally, to calculate how many units you need to produce, you subtract your beginning inventory from the total needed. So you take the 208,200 and subtract 45,900, giving you 162,300. You're going to do that same calculation all across quarter four and for the total end of the year.